Hey there, random internet strangers. It's Random Crypto Guy with this week's dollar cost average beast mode signals. Today is Sunday, May 23rd, 2021 at 5 p.m. Eastern Standard Time, New York time. And you will always find these signals in the pinned tweet here at Random Crypto Guy at forex_random. I pin them up here, and I do usually I do them in the morning, but because of the unusual circumstances of the extra volatility that we've had this past couple weeks, with this huge dip, downtrend, collapse, whatever you want to call it, that I waited until 5 p.m. So waited for the candle close. So let's get right to it. Let's go right here. And here are the signals this week. Dollar cost average beast mode for Sunday, May 23rd, 2021. For Bitcoin, the dollar cost average is 100%. That means whatever your dollar cost average is, you're going to take all of it and buy Bitcoin. The buy the dip signal is minus 74.6%. That minus means that we're going to pull money out of our escrow account. We're not adding to it. So we're going to take the money out. So whatever amount that you've accrued in your escrow account, you are going to take 74.6% of that out of the account and purchase Bitcoin. And all in, percentage is 0. That means you are not going to put any money into the all-in account. That is, but you're not going to take any money out either. We do not have an all-in signal, but we do have a very large buy the dip signal. So this way, we always have a little bit of dry powder for if we continue to stay at suppressed prices for a while. I did the signal last week in the morning, and then I updated it, if you didn't catch my updates, in the afternoon when the market started crashing and going down. I believe it was 57% or 66% or something like that. So if you took that out, that's great. If not, what you would do, well, actually, if you did take out the 66% last week, you would still only take out 75% of what's left over. Okay, that's what we're doing right there. So that still leaves a little dry powder left, and then we leave our all-in alone. We're not going to put any money into it. For Ethereum, the dollar cost average signal is 93.6%. That means you are going to take 93.6% of your dollar cost average and buy Ethereum with it. With the buy the dip signal is 57.57% even. So that means you are going to, whatever you've accrued into your buy the dip escrow, you are going to pull out 57% and purchase Ethereum with it. This is what we do when we buy the dip. So if you can do this consistently, you'll see over time the average of your dollar cost average going down, and you'll never be. It should be very rare, if ever, that you won't have some dry powder to buy these dips, and you'll still have 43% left in your account if price continues to drop. So, and then the all-in, you're going to take whatever's in the rest of your dollar cost average and put that into your all-in account. So that make that clear that the minus means you're taking money out of the account. If it was an all-in signal, we just put buying everything and then selling your furniture and your car and selling your kids into slavery. No, I'm just kidding. But and then as I said, I don't have the tools to hook up Binance Coin to the indicators that I use to track this, and I tried it on TradingView, but the indicators are similar, but they don't quite do the job that I need them to do. So for the interim, if you so choose, you would do, because it's only the second week I've done this, the Binance Coin, you can just do the same as Ethereum. Because the charts are very similar in nature. Bitcoin is holding up a little bit better than Ethereum and Binance, and we'll get to the charts in a minute. So until I can come up with a workaround for that, I got one, but it's going to cost me some money, and honestly, if I don't get enough followers, I'm just going to drop the Binance coin. If I do start getting more followers and people that want to do this method of dollar cost averaging, then I might consider adding it back in. But this will be the last week actually that I'm going to do for Binance Coin unless I get more followers. So with that being said, let's move on to the calculator, and we are going to go through the dollar cost average of Bitcoin and Ethereum. First, for Bitcoin, very simple. We're going to buy $100 worth of Bitcoin. That's our dollar cost average. This is if you're new. If you've watched a few of these videos, this is going to be old news to you, but I'm always coming up with new people. So $100 is what we use for our example for our dollar cost average. It might be different for you. It might be $20. It might be $150. It might be $2,000. But the point being that it needs to be something that you can consistently put in week after week after week, and that's the key, is to be consistent. Now, if you don't want to be skipping weeks and things like that. That'll mess up the system. It's something that you can consistently put in week after week after week, and it's not going to harm your budget for paying your bills, your rent, your lights, your electric, things like that. So if it's only $20, it's only $20. So, but get off zero. That's the main thing. But in our examples, we always use 100 to make the math easy. So we have our $100. That's how much our dollar cost average is every week that we have to purchase Bitcoin. And so the signal for dollar cost average is 100%. So that's really simple. It's 100 times 100%, which is 1 equals $100. So if it were, well, we'll get to Ethereum and that'll be explain it a little easier. So $100 is going to purchase Bitcoin. The buy the dip signal is a minus 74.6%. So this is a little bit different. So we've been accumulating and buying the dips, or putting some money aside to buy the dip every week. That sometimes it's as low as 3. It's usually no lower than 9%, but it might be as high as 80% depending upon what price is doing. But once we hit that threshold where we're buying the dips, now we're going to take that money out of the account. And in our examples, when I do this, I use 1,000 as the example. So you should accumulate a lot of money when prices just average moving along, not doing any crazy ups and downs. You'll start accumulating a lot of money in this account. And so just for our example, we're going to use $1,000. We've accumulated $1,000 to purchase for buying these dips, specifically for buying these dips. And the signal says 74.6%. So we are going to take $1,000, which is, in our example, how much we have in our buy the dip fund, times 74.6% equals $746. So we're going to take $746 out of that buy the dip fund and purchase Bitcoin with it. So now we've purchased $846 worth of Bitcoin in our example. It's going to be different depending on where you started doing your dollar cost average beast mode and things like that. So, and how much money that you have available week to week. That will be different for everybody. You can see we're taking all that money when prices were way above average, and then we're pulling it down when prices are down below the average. And that's what brings the dollar cost average down, is through buying these dips. So moving on, because we have 0 for our all-in, we don't have anything to do with the all-in account. So we're not taking money, we're not putting money into the all-in escrow, and we're not taking money out of the all-in escrow. And we still have our three buckets. We have our DCA, we have our buy the dip escrow, and we have our all-in escrow. And if you think of these as three buckets, where one is all Bitcoin, one is money for buying dips, one is for selling the farm and buying Bitcoin. That's the all-in signal, which occurs about every 2.5 years. But we're not going to put any money into it. Everything's going into Bitcoin for our dollar cost average this week. So with Ethereum, that's not the case. It hasn't quite got to that level yet. So let's go ahead and go to Ethereum. I'll go through it a little faster. And for Ethereum, our example, we have $100 for our dollar cost average. And the DCA is 93.6. So we are going to take 93 point, oops, let me back it up, times 93.6%. That equals $93.60. So of that $100 that we have every week, this week we're going to purchase $93.60 worth of Ethereum. Okay, set that aside. So the buy the dip signal is 57%. Once again, this is normally we put money into this account week after week after week, and so it'll grow into a nice chunk of change. But because this week is a buy the dip signal, we're going to take 57% of it out of the account. So that is, so in our example for our buy the dips, I always like to use 1,000. So that's how much money we've accumulated week after week, putting away $10 here, $50 there, whatever it might be. It can accumulate to thousands of dollars, possibly, maybe even tens of thousands, depending upon how much your DCA is. So we have $1,000. The buy the dip signal is 57%, so that's times 57% equals $570. So you're going to take $570 out of that account and purchase Ethereum with it. So your total Ethereum purchase this week would be $670. Or I'm sorry, that's wrong. Where did I get 570 plus 93.6? Sorry, whatever that is. I don't have that handy. Well, I got a calculator handy. What am I talking about? 570 plus 93.6 equals $663.60. That's how much you would purchase in Ethereum today. And then you would still have 43% left over in your buy the dip escrow account. And if there's another buy the dip signal next week, we will consider that 100% and start all over again. So we're continuing. We still have a little bit of dry powder. But we'll take it out, save it for, whether it's we get to an all-in signal or we start rebuilding. So that's how that works if we have week after week of buy the dip signals. So, and for Binance Coin, like I said, I couldn't get the indicators to work on TradingView the way that I wanted them to work. So I've got to do a workaround and get to MetaTrader to find a link to get to MetaTrader to be able to have those signals. But like I said, if I don't get the followers, then I'm just going to drop Binance Coin. I'll do it on my own, but I'm going to drop it from the signal. Moving on, let's close this out. Here's one more time. These are our signals right here. You want to write them down real quick, and let's move to the charts. And well, before we do that, let's go back here. Remember, it's a random crypto guy at forex_random, dollar cost average beast mode signal, and it's in the pinned tweet every week. And so we are moving on to let's go to, this is the Bitcoin daily chart, and as you can see, we've been tapping into this level. This is the level that I thought that it's going to make a better chance at turning. Before, we were up here before, just the week before, and I was talking, if it does crash, it's going to crash all the way down to here. But I thought there might be enough strength and might be enough demand to pull out of it. And right after I did the video, it crashed. So that's not what happened. But as you can see, it tapped into this stacked. Well, this is new demand here. That this is nested demand in here, and there was some stacked demand up here a little bit right up here, but that got canceled out. But new demand is building, so that's what we like to look for, is these new boxes that form up and that are strong and wide. That's a good sign. That's a very good sign that it is tapping back into it. You can see, I like to think of these as hummingbirds dipping their beaks in the nectar, and each time they dip their beak, there's less and less nectar to build, and so it's only tapped in this old demand area. And this is a pretty strong nested demand. We got monthly support in addition to several demand levels within here that have this has previously been tested. So, and then it got retested here with this beak of the hummingbird, and so it tapped in a little bit this time, and then retreated, shot back up, and now it looks like we're trying to test it again. Maybe, I think it's just kind of slowing down a little bit. And then we have weekly and daily supply. This line here is superimposed on top of another line, and that's a strong signal. When these double up, that's a really good sign that support is starting to build as well. So far so good. It looks like it's starting to hold here, but like I said, don't never say never. This is not there's no absolutes in trading, only probabilities, and so the probabilities are starting to turn upward, but they are not. As you can see, it's all red Heiken-Aishi candles all the way down. So, but we are building new demand here, and this is a good, solid, strong demand. It's not weak. And I'll show you an example of weak demand here with Ethereum. There's demand building here in Ethereum, but it's weak. As you can see, this area was tapped and then pulled in, and then retested here, and now this turned gold, which means this is considered turncoat. So that's not a good sign. So this is support turned resistance area. It's called a turncoat area. Now we do have stacked here support, and we are back above it, so that is a positive sign. But we have a weak demand here. You can see how much smaller this demand area is. This is daily. I think this is 4-hour demand. No, this is 4-hour demand right here. So this is much weaker than what's happening with Bitcoin. You can see, I mean, even if we zoom in, go back to Ethereum and zoom in, well, actually that's about the same, but it's just Ethereum has just shot up a lot higher. We had the bigger the rise, the bigger the fall, and that's the way it goes. But because Bitcoin is the king still, it is the one that's building the most demand the fastest. So Ethereum is right here, right behind it. And as I said, let's go to Binance Coin. I had to use this chart. I don't have the indicators that I like for this, so I just use some moving averages and kind of eyeball it. And here's our newest demand level. I put a small buy in here, caught the bounce, and then of course it just tanked again. So it was a very small. I'm just a DCA type move that I put in instead, because this is so new of an asset that I still haven't even set up the account for the asset. I've only done this the second week, but I just saw the ecosystem and the price, the longevity of the price. It's consistently gone up over the time that it is, and the fact that they burn tokens. Now I think they've burned them all, so that might be an issue as far as because I believe it was a pre-mine, and so there might be some issues with that. So I'm going to take a second look at it once again and look at some of the fundamentals and see if it is continued to be deflationary. But in the meantime, I bought into this because I was starting to get into DeFi, and I still want to, but I want to wait for a little while until this dust settles and we start getting back into a bull market. So I do have some money in a few DeFi farms, but nothing compared to what I have in my dollar cost average. Very, very small percentage compared to what I have in my dollar cost average. So I believe that's it for this week. Once again, you can find me, Random Crypto Guy, at Forex_random. Yeah, I know it's a terrible name. It's the pinned tweet if you ever get confused, and there will be updates. And as I've said, I've tweeted, but I want to mention it here as well. I am looking to automate this system, and but I'm not a very I kind of tinker with code, but I'm not a very I don't know any languages or anything like that, but I understand the logic behind it. And so I'm looking to partner with somebody to automate this system. So I'll be in Miami, and I will come check me out. I mean, this is what I look like, but except minus the laser eyes. And you'll see me wandering around Miami. So that's all I have for today. Let me put up the signals one more time so you can get them. Write them down if you haven't, and we'll have a good day.